Hi, I'm Darren Long from Delta Harbour Assets, and this week's Hard Money. What does it mean when we hear the term contagion? How does it impact gold and silver as it relates to cryptocurrencies? We're hearing terms like limiting withdrawals and so much more in this space, but it all adds up to one picture and the snapshot for 2023. Recession is coming. Protect your wealth. Let's talk about it. Here we go.
There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference.
And welcome again, Hard Money Podcast. Good to have you along for this week. John Scholes here. Of course, Darren Long beside me. Delta Harbour. DeltaHarbour.com is where you want to go. And start investing, man. Get some of that precious metals into your accounts. The way things are going now, best day was yesterday. Second best day is today. Right now, so do it. You want to make that phone call to Darren and the crew. Rob and the rest of the guys can take care of you for sure, walk you through the entire process from start to finish. 1-877-323-GOLD is the way you do that. And Delta Harbour with a U to have a look at all their social channels, including this one and YouTube and Facebook, Instagram, so on and so forth. Delta Harbour with a U is how you do that. Okay, Darren, sure isn't difficult to see the big picture here. You talked about possibly recession long ago. We did this many shows ago, even last year on this very show, from slowing economy on to rising interest rates, which are going to go up again, the issues of housing, once again, now possible contagion in the cryptocurrency space. That was some good news coming from the crypto people a week or two ago. Should come as no surprise, really. We're starting down the barrel of possibly a lengthy recession 2023. I think any of the naysayers a couple weeks ago, Darren, are fully on board now. It's coming. So hang on, man. It's on the way. What do you say?
Well, first off, welcome to everybody listening this week to Hard Money. And for those of you that check in and have seen the show before, obviously we talk about these issues on a weekly basis and their relationship to gold and silver. And of course, at the end of the day, we offer gold and silver, physical form, gold and silver. And our clients, I mean, this is a situation, John, that we've seen before. Historically, you and I have worked for a very long time, well over a decade. And this situation has crept up on us. And the last time it occurred in 2008 and 9, it was as if nothing gave us any precursor or any foresight that it was going to happen. Even though on this very show, when we were doing Hard Money back then and working together back then, we talked about the idea of contagion and what it meant. And back then it meant debt contagion across the globe as it related to the global financial crisis. We talked about the subprime problems, things like this. But in March of this year, I said on this very show that there is no coming back from this whatsoever in the medium term. And we called it recession late last year. We deemed it atypical. We did a whole show on discussing the traditional aspects of recession, from the lack of GDP growth or negative GDP growth to the contraction within the manufacturing space and consumer spending and the growth of debt. And we talked about this time around being much different in the fact that we could experience something we haven't seen since the 1970s, which is stagflation. At that time, we said to you on this show, one of the reasons to own gold and silver is because when it comes down to the situation of inflation and when we see the ugly head of the possibility of stagflation, what manufacturer is going to be the first to say, well, I'll charge less? What we've seen in the last few months is a bunch of very well-known analysts talk about the possibility of rebound in 2023. Well, it's always after the fact, right? It's easy to look ahead and predict something. I can say next year, we're going to come out of recession. 2 years from now, we may have organic growth. It's easy to say that. It's not difficult. It's in the here and now that people don't want to stake a position or claim. Now, when we talked about that back then, we said that high interest rates and inflation are here to stay. Bang on. We said that inflation is going to go higher. At that time, we were exactly right about that. Most likely, most of you understand now by this point that inflation at the street level is in the double-digit range, both in Canada and US. We are paying 10% plus more for many food items, 10% plus more for many consumer items, 10% plus more for automobiles, which have just broke on the used side to the down, but will take another half year to really come to full fruition as people deal with inventory problems. Just spoke with a builder yesterday. He's a big client of ours, huge brick supplier for Green Park Homes and Great Gulf and all these big builders. And in that discussion, we talked about inventory, and the signs of recession are everywhere because manufacturers and consumers and people that are holding inventory in the form of small businesses, medium businesses, they have to prepare for everything. And one of the problems that we talked about was supply chain issues during COVID, which businesses have not caught up from. And so many businesses, now that there's been opportunity to get inventory, have overbought, John. And they're coming into a time in which they need to oversell in order to get even on their inventories. And that is going to happen as contagion spreads across this country in the form of liquidity crunch. We're going to see less lending, less borrowing, tightening of the wallets, less spending at Christmas and through the holiday season. Black Friday sales out the door. They're going to be, you know, 100, 200, 300 per person spending less this year at Christmas in Canada than there was just a year ago. And that is a very, very good indication of where we're heading and why it's so important to diversify your wealth and not sit on it and just let it rest and hope for the best. You can't bury your head in the sand anymore because that could cost you your entire future. If I told you today that 10 years ago, I could have told you retirement would have been extended to 66, 67, maybe 68. You would have said, okay, well, I see that possibility. Now we're looking at a retirement in the next 10, 12 years that's going to be extended to 70 plus, John. And this is the reality people have to face. You have to go back to work. Reverse mortgages, now a very popular thing. Not back in the day, 10, 15 years ago, 18 years ago, when I started in this business, we weren't talking about reverse mortgages or our moms and dads having to reverse mortgage to help us to survive because we can't pay the bills, right? So this is a big, huge situation right here. And at the street level, no matter what any idiot pundit says, analyst or otherwise, banking official, TV personality, I don't give a shit what they say. Stats can, you know, stats in the US, doesn't matter what they say. Central banks, the situation is in place and recession is coming. We are going to experience something, and again, could lead to stagflation, the worst outcome possible at this point in time. Fed rate hikes have ground up stock and you know, eaten up bond investors. Prices have since tumbled, and I remain bearish, very bearish on stock market and more traditional assets, especially real estate right now. To buy real estate at this point in time in the US or Canada is suicide. It is absolute suicide unless you need a roof over your head. I have too many friends, too many family members, too many people that I care about in my circle that have in the last 12 months bought a home, bought a speculative piece of real estate thinking that the worst was over and are now down 20, 30%. Wow. That's a chunk, John. That's a chunk on $1 million+ purchase. So these are good folks. These are hardworking individuals. They don't have tons of investment savvy. They have one investment, which is their house. They made a bit of money. They went and bought a second one. And now they're learning the hard way that the advice that was being given was right, that real estate crunch is not over, that high interest rates are here to stay. They may not go twice as high as they are right now, but we're not going to wake up at some point in 2023 and see 1 or 2% prime. That's gone. That day is over. It's gone. It might never be back, John, ever. And so when we look across the entirety of what's happening in the business world, this is not a time to get excited about wealth generation in a booming economy. And it doesn't matter what your analyst, your bank manager, your accountant, or anyone who is in the positive about organic possibilities say about this. We have to deal with the here and now. The here and now is we've amassed so much debt. We've allowed our governments to paper over everything without solving real world problems, without letting companies burn to the ground and rebuild themselves from the ashes. And that is going to develop into a deadly cycle, which this turn of events is going to be the largest ever seen in history. And that's going to be a massive credit crunch, a liquidity crunch, a squeeze. And we're just seeing it on the peripheral with cryptocurrencies, which we'll talk about. We're seeing it in real estate now in the US. We're seeing all kinds of problems, 23% year over year in the last month down in overall sales in the US. The same thing here. The postings are adding up. I generally don't see, and I track the real estate market like a hawk. I generally don't see this many postings of homes expiring without buyers.
Oh.
And yet here it is. And just 10 months ago, everything that was put up was gone within a day or two. I mean, it was insane how house horny people were, and the tide has turned. And just this week, we had the Canadian Federation of Independent Business, the CFIB, report the following, which is it makes me so upset, so angry, and so frustrated to hear this. But they say, and I quote, only half of small businesses in Canada are back to normal sales from pre-pandemic levels. This is from Dan Kelly, the CEO of the CFIB. He says 2/3 of small Canadian firms are still facing additional COVID debt they didn't have before the pandemic. On average, that's approximately $110,000 in additional debt. And ultimately, he said, and this is the worst thing of all to hear, 17% of small businesses, or almost 1 in 5, 1/5 of all small businesses in Canada, are at risk of permanent closure due to the damage they have taken on over the course of the last couple of years. John, small and medium-sized businesses are the very backbone of this entire country, of our economy, both here and in the U.S. And when you pin your hopes on sales to big box only and not to the small mums and pop stores, the medium-sized, smaller chains, and you allow the little guys to fall, the outcome is a drastic one. This is not normal, and this is not, as we said back in March, your typical garden variety recession. This is a moment where, as an investor, the head of a family, a mom, a dad, a responsible adult, if you're listening to this podcast and you're hearing us talk about this, the need to react, respond is now. Be proactive. Get ahead of this. That contribution you make every year without thinking twice to your RSP or TFSA that you allow your bank, your advisor, your planner to just do as they want with because you trust them needs to be watched. This is not the time to allow somebody else to take control of your wealth, to take control of your future. You are responsible for that, and you can help to make that change. And one way to do that, John, one way to avoid those pitfalls, just take charge by looking at other options, by educating yourself what's out there. Look at the diversity that gold and silver bring to a portfolio and to your wealth, and their long-term record of protecting wealth, decade after decade after decade.
You know, it's interesting. A couple of minutes ago, you mentioned, as part of your opening rant there, bankers, accountants, financial planners, so on and so forth. They were always the holdouts to looking down the direction of gold and silver, physical metals, assets like that type. Are you seeing now that they're starting to turn towards that diversification for gold and silver, making that an offering, or at least advising some of their clients to do so? Reluctantly, I would imagine, but have you seen that tide kind of turn too?
Well, the short answer is yes, John. We are. Yeah. For years, I spent so much time trying to develop relationships with planners and advisors to help them understand the importance of diversity. You don't need a lot, you just need a little. But everything helps, right? Having a liquid asset like gold, it takes you away from too much third-party exposure in paper markets.
Yeah.
It gives you something else to balance your wealth. It gives you something to hold that's tangible in your hand. You can use it for barter. You can convert it to coin. You convert it to other currencies. It is so flexible in its usages, unlike other types of assets like cryptocurrencies and real estate. I can't take real estate with me overseas, right? What the hell am I going to do with a piece of land overseas? Nothing. Right? I can take gold with me. It's easy, right? Transport it, have it shipped. It's there when I need it. And it represents cash. It represents wealth. So ultimately, the biggest change happened this year. Finally, we made a breakthrough. After years and years and years of hearing regulators talk negatively about gold and silver in the physical form, and most likely because of the types of idiotic companies that were trying to get into this space without any regulation, without any oversight, without anybody paying attention to P's and Q's, dotting their I's, crossing their T's. I understand why regulators had a hard time. But this year we made a breakthrough. We are now taking planners and advisors. These are MFDA certified, Mutual Fund Dealer Association of Canada certified planners and advisors. They're coming to us with their client base. We've set up a program. That we know of at this point in time, as of December the 2nd, 2022, We are the only firm in Canada that we know of that has the blessing of the MFDA, and that's proprietary. We set this up after a decade plus of negotiating, going back and forth, and being vetted, and allowing them in to see us and how we operate. We're now able to work with planners and advisors. So of course they show up to our door because they know the only thing holding them back from talking about it is the owners of their companies, the company policies, the ideologies of the larger firms. If it's not on paper, it can't be controlled. If it's not on paper, it doesn't make as much money. Well, I'm sorry to say that that's not the way you should be thinking about a person's wealth. The way you should be thinking about a person's wealth, if you're going to help them, is what is best for them, not for you. And that's what's happened right here. So yes, that's happening. And we expect this to be a painful recession for both Bay Street here in Canada and Wall Street in the US, and also for Main Street, John, in 2023, one that will likely be global in its reach and lead to a huge contraction when credit liquidity dries up. So here we are, where we're helping families and asking people to educate themselves about gold and silver, because these are assets that last a lifetime.
Do you see any pullback or turnaround? I mean, maybe this is way too early to be answering this question. Maybe I should do it next spring, but do you see any pullback or relief when it comes to interest rates anytime soon?
Well, isn't that a common question, right? I mean, sure, we all want to know, right? That's the $1 million question. The answer is no. To anyone expecting the Fed here in Canada or the US to realize its rate increases have been excessive, or to come in and rescue the markets when they collapse, there could be money printing, that's for sure. But I'm not so sure that I expect interest rates to go lower, because cheap money got us here in the first place, and now we've built a system that's collapsing in on itself. So as it implodes, and as we realize our lifestyles cannot warrant buying real estate at 10, 12 times the multiples of income, that lenders are just no longer willing to take the risk, that the stress tests are going to trigger all kinds of foreclosures in real estate and other areas, that we just don't have the money to spend. This is what's going to happen. There's going to be no dovish pivot. Rates will perhaps not go much higher next year than what they're going to end this year at, but they will not be pulled back in 2003 by any magnitude. So historically, when this happens, John, we usually see a huge surge in people flocking to gold and silver the world over, and this is no exception. Just open up your internet and do a search for gold and silver buying, and you'll see the headlines. It's happening everywhere. Central banks are net buyers, the largest buyers in the world, right? What do central banks know that you don't as an individual investor, right? This is why we listen to guys like Kiyosaki, Rich Dad, Poor Dad. This is why we listen to guys like Ted Butler. This is why we listen to guys like Mike Maloney and David Morgan and others who have been right on the whole time. This is why we listen to Darren Long at Delta Harbour. I mean, we have been saying since 2004 that this is the outcome that we perceive to be occurring in this gigantic bullish cycle. And we were right. So gold, you look at that in the time that I've been here, John, it's up 400 and almost 80% in 18 years, right? Silver's up 390%, just shy of 400% at the same time in the past 4 weeks, just since the beginning of onset of November the 2nd, 3rd, a month ago. This story unfolds, and gold is up 170 an ounce. Nobody blinked an eye. Nobody said anything. That's 10.5% up.
Wow.
In just 30 days. Silver up 17.5% in 30 days, or $3.50 an ounce. And nobody blinked an eye. Just like nobody will blink an eye when it moves to 30, 35, 40, and 50. And it won't be till silver gets over 50 that it becomes an international story. By then, I only hope that people listening to this will have caught on, that they'll be able to share this with their friends and family, that you'll be able to have a little pinch of this in a corner, in a nook somewhere, that can help to diversify your portfolio and protect you. But this has happened, John, these big jumps in the last 18, 19 years, with less than 2% of the world interested in real physical gold and silver. What happens if 5% are interested? What happens if 10% of the world want exposure to physical
ain't
gold
enough.
and silver? There's not enough, right? And that's what will happen. Prices will explode, and we don't tout it anymore here at Delta Harbour because it's a natural thing. We're going to be part of it. We're going to live through it, and our client base will love it. They'll experience it, and for some, it'll make them very wealthy. And for others, they'll look back on this as a time in which, when diversifying through the usage of physical gold and silver, They can honestly boast to other people they didn't make the same mistake. They didn't allow their portfolio to drop by half the value, only to realize a decade later, through some of the best organic opportunities in the paper markets, that they're only getting back to square one where they started 10 years ago. That's a waste of time, in my opinion, and I don't want people to waste time anymore. I'm done with it, John. I think the amount of time wasting out there in the traditional financial world is bullshit, and the rich get richer while the middle class have to work 1 time as hard, 2 times as hard, 3 times as hard to pay for everybody else, because that's what our middle class is doing. They're paying for every goddamn bill that's out there. It's not the rich, it's not the wealthy, because they have become accustomed to learning how to live life with every tax loophole possible that exists in this day and age. And they're proud of it. They don't hide from it anymore. They're not shying away from it. As a middle class person myself, I want to share these values with people that understand there is a different way to amass wealth, a way that can be smarter, better, easier, more common sense. What's easier than holding a bar of gold in your hand? There's no lawyers. There's no red tape. There's no bureaucracy. There's no Sam from FTX blowing up your crypto portfolio like a dick that he is, like all of these things happening, right? Allegedly, right? Let's make sure we have that caveat in this day and age. Allegedly. So we'll see where the tables unfold, but it's a big thing that cryptocurrencies and everything else, we're losing trust. So why keep your trust in something that you can't trust anymore?
1-877-323-GOLD, by the way, to reach out to Darren and start the journey of some physical metals. Well, you scratch the itch, man. So let's open up FTX. Everybody by now, unless you've been trapped under something heavy or living under a rock, that story, this debacle, billions of dollars squandered or allegedly stolen, lost through this unfolding controversy. I've never been a fan of crypto. I don't know. Some guys are, but you see what happens now. I wonder whether this is going to lead to contagion in the crypto industry and what it says about the perceived value of cryptocurrencies and their relationship, say, to other assets like you guys handle, like gold and silver. Or is there one at all? Or just get out of it? The barn is a yard sale.
Well, I can't take any type of credit for having seen this coming, but I will say that we've talked about it ad nausea here on the show. I understand the value of new technologies and new ideas, and I understand the blockchain technology. I understand cryptocurrencies. I understand where their value might lie. I understand speculation, pure and simple. But this takes the cake. Buddy, this is bigger. This is Bernie Madoff makes Bernie look like a playground. Right? I mean,
Bernie's going,
FTX,
nicely done.
FTX was so popular at its height that Major League Baseball, one of the largest sporting foundations in the world, had FTX plastered all over their jerseys.
That's fucked.
This was the hallmark of what was right about the cryptocurrency industry outside of Bitcoin as far as exchanges are concerned, right? And herein lies the problem with contagion. It's all about confidence. Doesn't matter whether you're an investor with FTX. You saw this play out, right? This is a beauty of a story. In fact, people love the idea of unregulated options to have money basically travel the globe free of borders and with the perceived soundness of something like gold and silver, which is total bullshit that you now see, because that is what big names in the industry said it would be like and guaranteed us all it would replace. This didn't happen. Remember being a kid? You're sitting on the couch, Christmas season is coming, holiday season's coming, your birthday's coming, and you see that Hot Wheels commercial, or you see that radio controlled car, you see that doll you wanted to buy, and you see it in a setting, right? The radio controlled car is out in the dirt and there's a little water and it's going crazy. And then you buy the RC car. It goes a fraction of the speed that it showed in the commercial. There's no water. You're running it on carpet, which means it runs even slower than it does on the hardwood floors, but you don't have any hardwood floors to run it on. And you realize you get about 3 days out of it. And that's the brilliance of good marketing, right? Let's put the most well-known quarterback in the world of football to ever exist in Tom Brady as a spokesperson. Let's bring Shaq in. Let's bring Kevin O'Leary, Mr. Money himself. All fucking idiots, in my opinion. Complete buffoons. I don't care how much money they make to stand behind something that was so transparently broken and then to say after the fact we didn't know. It's ridiculous. It's a reminder of just how weakly regulated everything in that particular domain is. And then people cry and say, I want to have it regulated. Oh, now you want to regulate it.
Yeah.
Now you want the regulators to step in. Right? Let's be honest. The only reason Bitcoin doesn't crash the same way right now, like all the other cryptocurrencies, is because too many people bought it. Too many people that are of importance bought it. Whole countries bought it. And so that's going to be a protected asset no matter what, even if it does fall in value. And the whole option that lies in front of us about what to do next or how to play out is being felt in this term of contagion, right? So when we look at this situation, this was a child. Okay, I don't care where he got his education. I don't give a shit where he got his education. This was a child running billions of dollars through a romper room style carousel filled with other children, right? Filled with actors and role players and people from the metaverse, right? Like it's so ridiculous. And yet real people stood behind this and said, yeah, no problem. Love this.
Yeah.
Sound as can be. Great people. That's Sam doing so much for so many people, right? Bought off all kinds of politicians. And let's call it what it is, right? You buy off, you send money to politicians. You don't send it because you want them to wish them well. You send it because you want to get, you want to get a courtesy. You want to get a something done in your favor, right? I don't care if you support both sides. Maybe you want something from both sides of the party. I have no idea. But it's like going to a theme park and having the park post images of all the safety procedures and all of the important safety precautions they take to keep the ride safe, to keep the people safe, all the park safety concerns. You arrive to the park and you get on the first ride and you look around and you realize it's all 10-year-olds that are fucking controlling the rides.
It's not bolted together.
10-year-old hits the button and away you go up the fucking roller coaster. Right? I mean, like, it's ridiculous. Yeah. It's so ridiculous. So when I heard guys like Mr. Munger and Warren Buffett and others talk about why they don't like cryptocurrency, I listen.
Yeah.
These are among the smartest people in the world, and they give insight, no matter whether you like them or hate them, whether they're wealthy and you hate that or whether you hold it against them. These are among the smartest people in the world who buy and hold long-term value. And so when they talked about these things in cryptocurrencies, those come to weight. These come to part of the equation of why you invest in things. And so unfortunately right now it's fitting, though, because all the money's gone, billions of dollars gone. Who knows where? Nobody knows. And who knows how they even regulate it, because it's unregulated. It's out of different countries. They don't even know what jurisdiction can handle it, right? I mean, this guy inevitably should be going to jail, right? Because he's the head of all of it. And I love his interviews. His interviews, he's shaking like mad, like as if they're not 46 signs the guy's lying or telling a lie. And he's just going out there like nothing happened and nobody's hanging this guy. It's unbelievable to watch this play out in front of us. But I'll tell you what it is, John. It's a fucking reminder of how fragile the system is.
Yeah.
If every single listener to this show went to their local branch and decided to withdraw their money at once, do you know what's going to happen, John? The bank is going to limit withdrawals. It's going to halt withdrawals because without liquidity, the bank fails. And nobody ever thinks about that when they go about their day-to-day because they've put the ultimate trust into paper assets. They do the same with stocks. How could the stock market crash? You can't crash. There's value there. It's a company. It really exists. Until Frank, the accountant, decided to embezzle 50 grand and blew up a blue chip company, right? I mean, it's only as good as its people. And in this case, this is what causes contagion, which is flowing the world over. When one exchange fails, where people held tons and tons and tons of value, perceived value, and there was cash on hand in accounts, that cash was part of a huge mega universe, all interconnected through other cryptocurrency exchanges, other cryptocurrencies themselves. And when one fails, it brings down all the rest one by one. So what do you hear? The term of 2023, the term to be, the phrase to be, limiting withdrawals, which is what you're going to hear a lot about in the next 10, 12 months.
Wow, really?
Yes, sure, of course. So they let the kids run the amusement park, and this is the outcome. And now everybody's backtracking. And I can't believe that some people are still saying, yeah, but this Sam, he had great value, right? Great value, right? I don't know what else to compare that to other than to say That's like saying Bernie Madoff was not a bad man,
Yeah.
right? He had your best interest at heart. He just messed up. He just messed up. He took your life savings. It's all gone. He messed up. We can forgive and forget, right? Fuck no. Right?
Yeah.
This guy should suffer because he did something allegedly to people. And if he did and he's found guilty, this guy should go to prison and be forgotten about. And anyone that knew about it should be forgotten about, because that's something that does not happen with physical gold. When you buy an ounce of gold and you put it away, there is no third party liability. There's no paper involved, no bureaucracy, there's no red tape, there's no lawyers, there's
It's your
nobody.
stuff.
It's
You
your
own it.
product in your name, whether you store it at a firm like Delta or not. I could go belly up tomorrow. I don't have the right to touch your gold. The storage facility can go belly up tomorrow. They cannot touch your gold or take it. You can store it at home. It doesn't matter what you do with it.
Mhm.
But if you want something that is truly yours, not like fiat paper that could blow up tomorrow, not like real estate that you could lose because of interest rates or because of trigger points or because you overspent, not like Bitcoin or other cryptocurrencies that are just, fugazi up in the sky, as was said in The Wolf of Wall Street, such an aptly entitled movie in which they talk about, how to get away with these things. Not like those things. This happens every day, John, and yet people fall for it. They just give people their money. This is RSPs in Canada. There you go. Passive investing 101. The rest of the world looks at us and said, those Canadians, they're sure trusting. They just give 20 grand, 30 grand to their RSPs every year because somebody says you'll get a tax break. Well, it'd make the burden of taxes less worrisome. But did you know that RSP, that TFSA, that RIF, that LIFT, that Lira could hold physical gold?
Yep.
True. Could do that instead of owning paper and all the garbage, right? You're taking, in gold, one of the oldest and most trusted assets around the world, even by central banks, and using it as the most powerful insurance policy you will ever have, except for in this day and age, John, right now, right in front of us, we are staring down the barrel of a loaded gun, one in which gold in the next 60 months will double, triple, easily under these conditions should they continue to progress like this. One in which silver could be $60, $70, $80 an ounce. Right? One which in the 1970s, coming out of 1970 into January of 1980, made more millionaires in 90 days than at any other time in history with any other asset. That can happen again right now with gold and silver. So if you want to own gold and silver, well, you better learn the story. You better educate yourself.
Good time for a reminder after that shit show of FTX and cryptocurrency. Reminded that you guys have always maintained a long-term approach to gold and silver. It's not a day trading asset. It's something you grab and you keep, to your point, and you hang on to it. Nobody can touch it, right? And how do you do it?
Right. Well, basically, when you've come to the conclusion that we've come to, then obviously you have to ask yourself how simple it is. You got to go and you got to be reminded that there is a long-term approach to this. Number one, that all firms like ours are trying to do, the good ones anyways, is just connect the dots. Is just say, hey, in these particular moments, in these times of uncertainty, unlike maybe what last decade was, where we were looking more to organic growth and stock market growth and traditional assets, in this day of uncertainty where the traditional assets are at risk of losing value, diversify. Okay. Maybe you have more cash on hand. Maybe you have raw land as opposed to developed land. Maybe you have physical gold and silver, whether it's stored with us, whether it's in your TFSA, whether it's in a storage account, or whether you take it home. Does it matter, really? At the end of the day, no. Just that you have some,
Just have it.
that you should put some in and get some. And don't take my word for it. Do your research, do your due diligence. Look around at what people are saying and why they say to hold it, and where gold and silver have performed the best and under what circumstances. The period between 2000 and 2011 is our best example of this in most recent history. Between 2008, when the global financial crisis occurred, in 2011, where we can conceivably say organic growth took over and we had a period of stock market growth, traditional asset growth, real estate growth, so on and so forth. In that 36-month stretch, silver went from $8.50 to $50 an ounce. That's hundreds of percent higher. Gold went from 6 and change all the way to 1900 and change.
Yeah.
Multiple times higher. And to see that happen again is nothing. It's not a big deal. Everyone around the world that knows anything about gold or silver expects both metals to be much higher in the next 5 years. They expect both metals to look back on these particular price ranges and laugh and just say, remember the time when you could buy silver for $25, $22, $25, $28, whatever it was? Remember that time? Remember how silly it was? You remember it was less, few ounces were less than a tank of gas.
Mm-hmm.
A couple ounces was less than a dinner. Everything's so expensive now, John. I don't understand why people don't understand this, but the market at large topped out a while back. We're not going to get any more gain. We're not going to see a gigantic jump up in the stock markets. We're not going to get these massive rallies that are going to double the TSX or the Dow or the NASDAQ anytime soon. God forbid you didn't even pay attention up until this point this year, because most of those indices have lost major amounts of money. So assuming that you have the disposable income to do this and that you can repurpose a portion of your wealth, or that you have the funds to do so, you would just take a look at this and you would make the decision to simply go over to the website, to Delta Harbour's website, and shop online. Maybe it starts with just a simple take a peek, see what there is. What are the different types of products? How do I know what the purity is? Is it important, the purity? There's lots of FAQs on there, and you can call us to ask. Then you might want to say to yourself, hey, I've amassed a chunk here. I've put 10, 20, 100 grand into gold and silver. I think it's safer if I store it. So you have that option to store it. It's in your name. You can touch it and hold it anytime you want.
Mm-hmm.
There's no third-party liability. There's no hypothecation. Nobody else has the right to claim your ounce. It's your ounce with your own serial number. And it's separated and segregated from our assets and from the storage facilities assets. So if we went up tomorrow and our business folded 18 years after I got into the business, I don't think that happened. But if it did, we can't touch your assets that are in storage. Those aren't ours to touch. Same likewise with the storage facility. It's why we work with them, because the assets are segregated. They can't, under any circumstances, even if they cease to exist tomorrow, they can't touch your gold or silver. So that gives some reassurance to you, that also adds to the value of knowing that you can sleep soundly at night, your product stored on the pillow, and wake up the next day, make a simple phone call, and be able to liquidate your holdings, whether it's gold, whether it's silver. All those things are possible. And then, of course, we talked about it and touched on it, but these are assets which can go into your RSP and to any registered accounts, LIFs, RIFs, LIRAs, or ESPs for the kids. What a brilliant idea. Simple concept. Nobody uses it. I do. I'll show you how. But anyways, besides the point, you can put physical gold and silver into a registered account. And best of all, if you've got something that already exists over here at another institution, let's examine the possibility of bringing that over to Delta Harbour, because you can do it under the umbrella. No tax implications. Move it from one to the other. Over here, it's sitting in the traditional paper assets, mutual funds, stocks, whatever you have.
Mm-hmm.
We'll liquidate on that end, okay? And then we'll bring it over to this side, and it'll all end up being here and usable for both gold and silver. So ultimately, that is something that you can do here. Or ultimately, you can just go ahead and use what we call bulk bullion and have the option to go ahead and do that. And when you know, below it. So let's finish up this show right now, John. We'll say thanks to all the listeners, and I got to get the door.
And with that, we're going to wrap it up, guys. Again, go to the website, deltaharbor.com, Harbor with you, to start that adventure and filling up your portfolio with these precious metals that you're going to own directly and have ownership over. Nobody else will. And of course, you can check out this podcast and past episodes on other social media. And then 1-877-323-GOLD is how you reach out on the phone. Thanks, guys. We'll catch you next time in the Hard Money Podcast.